Hello, friends. Welcome to the Logistics of Logistics podcast. My name is Joe Lynch. Thank you so much for joining us today. Today's topic is freight brokerage tech trends with my friend Kevin Hill. How's it going, Kevin?
I'm doing great, Joe. Thanks for having me on the show again. It's always a pleasure to sit down and talk with you.
Yep. It's always a pleasure to talk to you. I've said it before. You've been on my podcast a few times, and you were my second guest way back 7 years ago, and that you were doing that as a big favor to me, just as you are today.
And it was my first podcast I was ever on in my life, where it was your podcast.
Yep. Back then, and when I'd say, would you be on my podcast? People would be like, what's that? But anyway, Kev, please introduce yourself and your company, where you're calling from today.
Yeah, my name is Kevin Hill, and I am the owner and president of Brush Pass Research, where we do a lot of research on the freight brokerage industry and provide the intel and data that if you're selling into that industry that you need to know about to really take your product to market, your new technology to market. Calling out of Fort Worth, Texas today. And before that, I was with FreightWaves for about 4 years. Did a lot of media stuff on that end. And before that, I was the founder and owner of Analysts, which I sold to Highway 2 or 3 years ago.
Very nice. Very nice. So back to Brush Pass Research. I think one of the things that is going to become clear as we talk today is the freight brokerage industry has grown up over the last decade or so. And I told you before we hit the record button that I felt like we wouldn't have companies like Brush Pass Research a decade or two ago because the industry was overlooked. But now it is not overlooked. I think we'll talk a lot about that today. But who are the customers for Brush Pass Research? Who are you selling to? And what problem are you solving for them?
So it's a problem that I encountered. You talk about 10 years ago, we wouldn't have places like Brush Pass Research. I created this master list of freight brokerage decision makers, right? That I emailed out to whenever I was marketing carrier lists. And it is a product that is for people like I was back in the day. But if you have a new technology, if you have old technology, and you're looking to really segment that market out, find decision makers, if you're selling anything into the freight brokerage space, you need the Zoom or the Apollo of the industry, right? You need a lot of analysis that puts that all together and gives you a very simple format to start prospecting today within 5 minutes. So that's really what I do.
So you're selling basically to the tech companies that sell to freight brokerage?
Exactly. So if you have a technology, you're marketing that to freight brokerages, you got to know which ones are the ones that go after. And usually, if you're a tech company, you're looking for larger ones on the small end, maybe 10 employees, all the way up to C.H. Robinson. And that's about 1,000 or so companies. I publish research every month on the number of active MC numbers, and there's 25,000 right now. But out of that 25,000, there's only, say, 1,000 to 1,500 that most tech players are really interested in. They have that size and scale.
Yep. And by the way, if you're not already following Kevin Hill on LinkedIn, you need to follow Kevin because he puts a lot of his research and his insights he puts on LinkedIn. Very good follow. Anyway, so there's a lot I want to cover with you today. But first, let's talk a little bit about, you started to touch on your background. Let's get a little more deeper on that. Where'd you grow up? Where'd you go to school? Some career highlights before you started Brush Pass Research.
Yeah, I grew up in a small town outside of Tulsa, Oklahoma called Owasso. Lived there my whole life and went to OU after that. Got a bachelor's in archaeology. So I was an archaeologist for a couple of years.
No wonder you're in freight.
I know, right? I moved to New York, did some things around finance, financial media, and came back and did an MBA at OU and became a freight broker for some reason. That was back in like 2012. So we were talking before we hit record. Back in the day, you're almost not embarrassed, but you're...
The industry wasn't respected.
Yeah, I'm a broker. Do you have assets? No. Click.
Yeah, that was so true. And that was the first thing when you'd say, hey, I'd like to talk to you about your freight. And then somebody goes, do you have your own trucks? No. Click. Not the case anymore. I'm not saying people are looking forward to those phone calls, but it's at least this whole industry, and then we'll talk about this today, the whole industry's reputation is upgraded, and I think just also the capabilities have upgraded a lot. But anyway, I interrupted you. So after you're a freight broker, what'd you do?
You might have a couple load boards, right? And that was about it. And you might have a TMS. It was a nice to have back 10, 12, 15 years ago. Now it's a must have. So there's a lot of technology that's in the market since then. But yeah, so as a freight broker for just 3 or 4 years, and developed just a product called Carrier List, and it was really sourcing trucks. It was a sourcing tool. It was before the real big technology splurge came in, where everybody was talking about real-time capacity. It was us making phone calls, collecting data on each carrier's trailer pool, right? Do you run vans, flatbeds, reefers? What are your preferred lanes? What specializations do you do? And I sold that to freight brokerages, right? And that I was doing that, got a job with FreightWaves to be director of research. I moved to Chattanooga, Tennessee from Tulsa and started my career there. I was editorial director for a little bit, managed the media, which TV and print.
Oh, you also had that famous podcast over there, which was Put That Coffee Down. I think everybody who's listening to the podcast in this space knows that one.
Yeah. So Put That Coffee Down. The Junior and I started that. It's probably one of the best days, right? Best highlights of my career that day that we put together, Put That Coffee Down, because we had the concept in the morning with the artwork, we had the title, we had it up on social media within a matter of hours. And that's how
That's what I love about FreightWave starts podcasts. And I heard Dooner say, he goes, we'll start a podcast on a topic like COVID. They did a COVID podcast. And he says, as soon as it doesn't make sense, we'll kill it and bury it in a shallow grave.
Yeah. It's a wild time, right? So we started a lot of different things and saw what worked and what didn't work. And then COVID hit, and I think that accelerated the media aspect of the industry, right? I know that the show and a lot of our shows got a lot of popularity because everybody was tied to their computer. They couldn't leave their house, right? They were working remotely. They were looking to connect.
FreightWaves became then the center of the freight world in a lot of ways, and they still are. And podcasts like mine, I always think I probably started my podcast around the same time they started their podcast, but it just such reach that it just helped everybody. And I think people sometimes think, oh, podcasters are all competing. But if there's not a market for podcast listeners, then nobody succeeds. And I think in a lot of ways, FreightWaves created a market so everyone else could benefit from that.
Yeah, it's great. Yeah, the market was created during COVID, really, or accelerated at least during COVID. It was really interesting to see, had a bird's eye view of that whole creation, that whole trend. It was nice to be a part of.
Yep. So when and why did you start Brush Pass Research?
So I started Brush Pass Research in 2023, mid 2023. I'd left FreightWaves. I was working on another business idea that kind of got stuck because just too complex. And I had a couple of people ask me to generate a prospecting list for them in the freight brokerage world, right? And I started doing that. I started recreating my original list and thought I might as well do this. I know this area. I know the space. I know the companies to go after. I could do it much better. I can make a commercial product out of it instead of just an internal list. And at that point, the contact details, but then started collecting what TMS each brokerage use, what onboarding system they use, and really started collecting information, what I did with Carrier Lists on the phone, making calls through my connections. And I just thought just having a product that has a very good focus, do the analysis, make sure that all the I's are dotted, all the T's are crossed. And it is really a perfect product if you're selling into freight brokerages, just to be able to download and use immediately. There's no more that you have to do. You can click and sort and find exactly what you need and the people you need to reach out to drive your sales forward.
Yeah, Kev, I remember talking to you just when you were kind of playing around with some different business ideas. And I remember you said to me, one time that I'm going to create a list of all the top shippers that everyone wants to work with. And I was like, "Ooh, that's cool." And then the next time I talked to you, you said, "I'm going to create a list of all the brokerages." And I was thinking that, oh, like, why, right? Why do you need a list of brokers? But in a lot of ways, the shippers are known. Brokers, the freight brokers, were still an underappreciated area. And I think we've seen the status, the reputation of the industry go way up. We see venture capital companies come in and support some of the tech startups that are in the space, but also all the tech that the freight brokers are buying. So you hit on a great idea at just the right time.
Yeah, it goes back to whenever I was doing carrier lists, right? So I was a freight broker. I knew how to move a load, but I didn't know the industry. And you see a lot of great tech companies coming out that they want to market their product and they don't have a bead on the market, right? That they don't have a bead on, they know the size of the market, maybe. Sometimes that's not exactly correct how they're segmenting it. So you need to learn how to segment that, how to attack it, and having the data, right? Because it does take a long time. It could take you 6 months to a year to build it yourself as you go along marketing your product. And that's 6 to 12 months of slow sales. You're slowing down the sales cycle, right? And if you're a new company, whether you're funded or bootstrapped, you need sales fast. You need to get in the door. You need the demos. You need the face-to-face conversations. And you go to conferences. You do all kinds of things to generate that. But one easy way to do that is to know your market, know who you need to call, have that at your fingertips.
I think talking to you now, and we'll get into some of the details of some of your research, I used to always say, what percentage of freight is brokered versus which goes directly to carriers? And I asked that question to a lot of people over the years. And only recently has anyone given me any insight into it, and it's you. So let's first talk about that. The percentage of freight. So I'm looking at what percentage of all freight is brokered compared to going direct to carriers.
Yeah, so if you take revenues and you divide everything out, and that's one of the things I've done is collected brokerage revenue through multiple sources to get a good, accurate picture of each brokerage with their annual gross revenue. So if you take that, you divide that against the ATA numbers and you subtract out the private fleet operations and you get to commercial vehicles, you're looking at a pretty steady percentage of 15, 16, 17% pre-COVID, say up to 2019. Take 2020, 2021, and go through there. That jumped to about 25%. So one of every four loads, you could say, were brokered. 2023, probably 2024, that dropped a little bit, maybe 2 or 3 points, but we're still above 20%. We're probably 21, 22%. Roughly somewhere between 1 and 5, 1 and 4 of every load is brokered, which is, significantly more than it was in 2018, 2017.
Yep. And I think that's probably reflects the shippers out there and the business world at large recognizing the value of the space. I think in a lot of ways it was an undervalued, maybe not respected completely. People did it and it was viable businesses, but I think in so many ways it was just overlooked. There wasn't a whole bunch of, we'll talk about some of the larger companies. There wasn't a whole bunch of these companies that were publicly traded. There wasn't particularly any that had a name. There was no big time investors in the space. So it was just, freight broker. It had one of those, I won't say fly by night, but there was some bad actors, and I don't think it was respected. Now I think shippers realize when I'm talking to a broker that they're the ones who are going to bring the technology and the customer success process and customer support and customer service. And a lot of times the carriers are investing in trucks as opposed to investing in tech and people. And we all know why they need to invest in trucks. They're pretty expensive too. So it's the ultimate tech. So please speak to this moving from 15% of all freight brokered to 25% during COVID. And now you said it's 2021 right now. Talk to that.
Yeah, I think it goes back to what you're saying. 10 years ago, 15 years ago, you are looking at a truck broker, right? They're going to go find you a truck. It's going to complete the shipment. It's not always going to be perfect, but when you need something on the spot, they can deliver, right? I think technology has changed a lot of that because now there's a lot of value, a lot of extra value that brokers and 3PLs can offer, right? There's a lot of integrations. There's a lot of visibility tools out there. There's a lot of different extras that
Yeah, the killer
brokerages
apps.
can get their arms around, which brings in the investors. It brings in everything. But there's just a lot of neat tools, and brokerages you've seen go from old school. A lot of them are very tech companies, right? Very
Oh, very much so.
technologically focused, right? So they can get intertwined, and you have the 4PL market or the managed trans market in brokerage and in 3PL.
It's also become less transactional. There's still lots of transactional freight, but I think generally speaking, a lot of companies, larger companies, are saying, I don't want a transactional relationship. I need somebody who can come in and be responsible for all my freight, give me great KPIs, be a true partner, which means you bring tech, you bring people. And so I think in a lot of ways also, if you're working with a top carrier these days, they're brokering your freight. So we're going to 30% is going to go on brokered and 70% is going to go on our own trucks. And people go, oh, okay. If the carriers are doing it, must be.
Yeah, you see the large asset-based companies, right? They're just not large asset-based companies anymore. They're more complete 3PLs, right? They have the brokerage arm, they have managed trans arm, they have warehousing and distribution, and they're moving to that center almost, right? That you don't have this clear delineation anywhere anymore. You have brokers just buying trailers at least, right? You have
Yep. So Kev, let's talk about these customer segments. So again, we've observed that more freight is brokered, and that's for just the reason we talked about. The whole industry just got upgraded. But you've put together broker segments, and I'm going to count them here. You got 1, 2, 3, 4, 5, 6 different categories of brokerages. Please walk us through those.
Yeah, so you have the enterprise level, right? That's $500 million or more in annual gross revenue. And that covers, I think, the top 47 or 50 of the brokerages. And then you have what I call large cap. That's 100 million in gross annual revenue up to 500 million. Then you have mid cap, which is 50 to 100 million. And then you have growth cap, which is at 10 million to $50 million range. And then you have micro cap, which is about 1 million to 10 million in annual gross revenue. And then you have the other 22,000 active MC numbers out there, which are lifestyle brokerages, is what I call them. And they typically do less than $1 million in gross revenue.
Very interesting. So the first segment we talked about here was enterprise, and those are companies over 500 million. Yeah, I know these are names we would recognize. That'd be like the C.H. Robinson that is in there. I think
TQL or
JB Hunt, I believe, is in that category, even though if you split out their brokerage revenue from their trucking revenue, I think they're still in that enterprise level.
Oh yeah, they're about 1.2 billion on the brokerage.
Yep. And we're seeing a lot of that. I had Ryder on my podcast recently. They just bought a very large broker. So they were always a big player, and now they're a big player with a brokerage. And some of the most capable transportation teams would be the carriers who have now bought brokerage assets, brokerage companies. And I think in a lot of ways, some of them started off saying, I just need backhauls. So I'm always calling a brokerage for backhauls. And then they said, why are we working with a brokerage when we could start our own or buy our own brokerage? And those backhauls were pretty important to them.
Yeah, Knight Swift, Warner, Schneider, all have large, JB Hunt, as you said, they all have large brokerage enterprise level, over $500 million in revenue.
And these companies are going to work with the Fortune 300, and they're going to work with the biggest of the big.
Yeah, we have a truck. We'll put the truck on it. If we don't, we'll send it through the brokerage, and we probably have the technology to sync the entire organization into that top 300 shipper.
So the big dogs, the enterprise, are 47 to 50 companies thereabouts. It's always going to change depending on the day. And the large cap, that's the 100 million to 500 million, still very big companies with a 500 million in revenue. What's some characteristics? And you said there's about 127 of those.
About 127.
And are those companies that are fast growing? Are those companies that are making acquisitions? What's going on with those guys?
Yeah, but both fast moving, fast growing, both organically and through acquisitions. You're seeing a lot of consolidation in the industry right now, especially in these lean times. Financing capital markets is challenging. The big growth and downturn has put a lot of stress in the system, especially on that segment, along with challenges the customer base because they're going after the enterprise shippers too. That category is looking to get to that 500 million and above mark. And they're doing it with technology, right? Everyone's doing it with technology that they've got more of it figured out than, say, the mid cap, who's a very aggressive growth. I would say that those companies have very aggressive
So
growth.
the mid cap are the 50 to 100 million dollars, still good sized companies. And you told me there's about 200 of those, give or take.
Yeah, 200. And those are really the sweet spot whenever you're a new tech company trying to gain entrance, trying to go to market. That 50 to $100 million cap is probably the best market for you out there. They make decisions faster than people doing $100 million more that have less solutions in place. And they have a lot of growing pains, right? They're trying to double in size as quickly as possible. They've gone from their legacy systems in the tech side and their SOPs and the processes and procedures. They're delegating more, that they're hiring more people. And there's just a lot of growth pains to go, and they're searching for solutions.
Yep. So we talked about enterprise. That's 500 million and up. There's 47 of those. The large cap, 127 of those guys, and they're about 100 million to 500 million. Growth cap, there's a whole bunch of them. There's 747, maybe 750, depending on the day. And they're 10 to 50 million. And you said that is them in the growth cap and the mid cap is a good place if you're a tech company that you want to start getting a foothold in the industry. And by the way, I should also mention a lot of the tech guys, and I talk to them, I know you talk to them, they aren't necessarily from this space. Some are. Some were. I used to work in a brokerage, but many others just says, I've always worked in technology and now I'm working in a market and I don't know a freight brokerage from a freight forwarder from a warehouse. So they need guidance from companies like, well, I say companies like yours. I think you're the only one doing it, Kev. They need a guide who says, I understand this business.
Yeah, that it helps tremendously, right? You spend all your time researching and trying to put the puzzle together, or you can just buy the puzzle out of the box, right? And it's the same pitch as everything else and the tech that they're building and selling as well, right? Why do all these manual tasks and try to do this when you just automatically do it?
Yeah, and this industry has so many blurred lines. When somebody says, oh, we're a 3PL, what is that? We have warehouses. Or we're a 3PL, we have trucks and a brokerage. And we use terms in a way that makes it very confusing to understand our space. So if there's somebody coming from outside our industry to sell in this and they're a tech company, they could spin their wheels for quite a long time before they figure out who the hell we're supposed to sell to.
Yeah, you're exactly right. And that 750 companies in the growth space, right? At $10 to $50 million in gross revenue, you have a lot of those or brokerage is a segment and maybe a smaller segment from the overall. They're a larger asset-based company. They're a larger freight forwarder. They're a larger general 3PL, warehouse and fulfillment that has a smaller brokerage that moves trucks, and they have different business goals, and it becomes this quagmire that you can find yourself in.
Yeah, and there's a lot of those. I've talked to people, they'll say, oh, the fourth quarter, we always lease 5 trucks because we move Christmas trees. And you're like, okay, now are they an asset-based company all of a sudden?
I know, right?
That's the crazy thing about this business.
It really is.
So the micro cap, those are still good sized businesses. If one of your neighbors owned it, you go, that guy's killing it. Those are 1 million to 10 million. And you said there's 3,000 of those.
Yeah. There's it's harder to pin down, but I would say there's roughly about 3,000 of those, and a certain percentage, maybe 10%, are going to be aggressively growing brokerages. Right? They're going to be growth cap in a year. They're going to be mid cap. They're run by people who have been at the enterprise cap, leadership at enterprise cap, leadership at large cap, who are starting their own business and they're just gearing up. But those are forward thinkers as well.
Yep. And then there's the smallest. These are the guys that are the lifestyle businesses. How many are there of those guys?
Everybody else, right? So 20,000, when you look at the active MC numbers, 25,000 that are active. How active are they? There's a large percentage of those that really aren't active whatsoever. And then the rest, it might be a part-time gig. They might be selling real estate or selling insurance and brokering. They might have one or two customers that they've always brokered trucks for through the years, and all kinds of situations. But they one person, two-person operations at max.
So I'm going to summarize this, then I want to get your final thoughts on just this piece of it. So the total brokerage segments, there's 6 of them. Enterprise levels, 500 million and above, there's about 47 of those. Large cap, 100 million to 500 million, there's 127 of those. Mid cap, 50 to 100 million, and there's 202 of those. Growth cap, 10 to 50, and there's 747 of those. Micro cap, 1 million to 10 million, about 3,000 of those, so bigger number. And then lifestyle, that's $1 million and under. So that's about 20,000. So all told, there's about 25,000 freight brokerages.
Yeah, there's 25,300 and change as of December 31st, 2024 that have active MC numbers, active insurance. They're up to date in the FMCSA.
Yep. And Kev, I know because I've talked to you, but I also follow you on LinkedIn. There was like 30,000 not so long ago. Please elaborate.
There were. The last 2 years, we've lost about 5,000 of those freight brokerages, right? And those are all net numbers too, right? So in net, we've lost 5,000. I'm putting together some data that hopefully I can have out in the next couple of weeks around. So if you take January of 2020 to December of 2022, so take those 3 years, 25,000 new MC numbers were issued. Right. So it's hard to talk about the numbers at that point because pre-pandemic, we're probably 17, 18,000. We've had up to 50,000 MC numbers to all whirling around. Right. So if we had 25,000 new ones created in the span of 2 years or 3 years. We have 25,000 total now. So there's been a lot of churn. You get into the numbers, I get confused when I get into the numbers. Worked out. But the moral of the story is there's been just this massive amount of churns and people getting into the industry and then getting out.
And I think there's people who jump in when we have the rates are really high. And I think the nature of the drivers is anyone who's willing to drive a truck is willing to work an honest day's work and then some. So a lot of them are contractors, and they say, or contractors or plumbers, or they go run a warehouse. A lot of them drivers will say, I'll drive when I can make a lot of money, but when I can't make a lot of money, I'm going to stay close to home and do some other job. Again, I always say, if you're willing to drive a truck, you're willing to work pretty darn hard. And the world needs those guys.
I know, very hard.
So anyway, we've seen a little bit of attrition, and I know that the trucking market has lost some trucks because of the lower rates. There's no way to really quantify this, I don't think. But I think during COVID, people made a lot of money. We also got checks from the government. And so people were flush. And we had this growth in the freight brokerage market. And then when it came time to shed some trucks and shed some trucking companies, I think all these brokerages that were pretty darn good by this point kept people in the space longer. So it's, if I was had a few trucks, it's a lot easier to stay in business if I've got a good relationship with a broker or two.
It is.
I hear people call me and say, "Oh, I just want good shipper freight," meaning I don't want to work with brokers. But A good broker can be your very best friend.
It could be, right? If you have one or two or three trucks, it's very hard to get in with a lot of shippers, right? Because the time it takes to onboard you, put you in the routing guide and the mix, it's just cost prohibitive, right? Because if you have that top 300, top 500 shipper, right, with that kind of volume, they need volume on their end to justify having you in the routing guide, right? You have to have a lot of trucks available. But if you can go through a trusted brokerage, who's the proxy, who can get that volume because they have the access to trucks, but if you have a really good relationship with them, that's better than a shipper in a lot of cases. It really is.
I think the challenge right now is when the rates are down is a freight broker is looking and saying, okay, we're going to do it for $2,500. We're not going to make any money. And then you find a carrier to do it and they're like, oh, I'm only getting 2,200. I'm not making any money. The broker, but at least the broker has a sense for what the overall is. And I'm not making good money on this lane. But the carrier, I believe still thinks, oh, that broker got $3,000 for this. I'm getting ripped off. that is a little bit of the problem. That's the rub between the carriers and the brokers. Right now, I don't think anybody's getting really rich on it. But at least the broker sees the real number, and the carrier oftentimes doesn't. And by the way, we'll talk more about this in a minute, but that's one of the reasons you and some others are doing this. Our friend Dan Lindsay are doing the Broker Carrier Summit. So we'll talk more about that in a minute, but we've got to get better relationships. I know it's come a long way, but it needs to come even further.
It does. It does. It's tough sometimes, but if you're a trucking company out there, if you're looking at 15%, which is the average across all the loads in the industry by any benchmark that you look at, is 15%, right? Brokers aren't making 80% margins or 70% margins on average. If you take all the shipments out there, 15%. If you're a trucking company or owner operator, you got 2 or 3 trucks, 5 trucks. If you hire a salesperson, you're going to be paying 15% to the salesperson. And a salesperson can only call so many people in a day, right? They can only set up so many shippers. They can only do so much. So you're just outsourcing your sales. And if you take it that business philosophy of I'm outsourcing my sales and they can take their cut of 15%, we're all good. Let's have a good relationship.
So, Kev, I want to talk next about this can be very high level, but I want to talk about some of the technology trends that we're seeing in the freight brokerage space. So first, talk about the transportation management system. I guess that's the foundation of this business and kind of the growth. And I remember when I was at a 3PL thinking 15 years ago, is that right? Even longer. Telling people that we had a transportation management system. And when I showed it to them, gave a little demo, they looked at me like I was Steve Jobs. It was like, oh my God, look at Steve Jobs stopped by the office and showed me the most miraculous thing. It was so cool. And then one day, it just seemed like I'm showing the TMS. And somebody goes, yeah, this guy yesterday showed us something like that. Just ho-hum. So please talk about the growth of TMS.
We were talking about it before we hit record, and back in the day, it was a nice to have. It was a new shiny toy, right? And that's the reason why I was laughing, is because it was a new shiny toy. It's adopted, if you take the growth cap on, certainly, and I'd say the micro cap too, probably, it's 100% adoption rate. You're not going to find any brokerages out there who do not have a TMS, where they built it themselves or they have a third-party vendor. They have TMSs, right? So it is a cost of doing business now. It's an essential piece of software. Yeah, it is table stakes. How could you even operate without one?
But I think, though, Kev, within the transportation management system space, it's a huge space all by itself. There are very inexpensive tools that you can use, transportation management systems. And then there's the very sophisticated ones, and they're much more expensive. And I think there's also what I'll call the originators, right? The old guard. I won't mention names, they're not important right now, who created these systems 15, I think the oldest one's probably 30 years old, maybe more. And some of the largest companies in the world started using them and have millions and millions of transactions in them. And even if it's not brand new, it's hard to upgrade those. I know they are over time, but that's always one of the challenges is when you adopted early and you're a Fortune 500 company and someone says, hey, you should upgrade to this, move everything to the cloud. You're like, yeah, that's easy if we didn't do 3 million shipments a year for the last 30 years.
You're exactly right. Anyone who's had an economics class remembers switching costs and how important switching costs are. And there's probably not another piece of software out there that has more dire switching costs than a TMS. Maybe your accounting system, your TMS.
That and ERP.
Yeah, ERP. Yeah.
I think Stephen Miller posted something the other day on LinkedIn about ERP implementation challenges. Holy moly. Some really horrible things can happen when you're getting an ERP implemented.
I know. And so you find that the brokerages will switch once the fires are blazing already with the current system. And a lot of times they've probably outgrown what they're using. It doesn't do what they have to be, that has to be done. Whether that's a business segment, whether it's LTL or whatever it may be. And we're about to get consumed in a fire that our TMS is creating before we actually switch.
Kev, if I could add something to this, is when we look at our transportation management systems, it was the silver bullet when we implemented it 15 years ago. It did everything we needed it to do. And if there's something outside of it, just had to go by email or be an attachment or something. But now, increasingly, we look to our transportation management systems as maybe the center of our universe. And I liken it to a framework that you can keep adding to. So now I look at it as it has to allow integrations for all these killer apps. And I want to talk to you a little bit about the killer apps. So the first one I want to talk about, the visibility tools. What percentage of shipments do you think are using visibility tools right now?
It's a really good question. And I've seen some data about it. Percentage of shipments, I think, is still relatively low on the shipment side, 30, 40%. I think probably 60 or 70% of the brokerages out there have some sort of visibility tool that they use maybe on a load by load basis or a client by client basis, but they have the capabilities. And that goes back to the TMS, right? Is TMS 2.0 now. And it's becoming table stakes pretty quickly that a TMS has to be able to integrate with all these killer apps. That's the thing, the number one list on, because building a load, managing a load, it's got to do that. Everyone can do that. And that's all about the integrations and being able to integrate. And so going back to visibility, probably 70% of brokerages have a pretty clear defined one of the visibility tools, right? It's integrated in their TMS.
So that would be Project 44, Micro,
Four Kites, Trucker Tools, Samsara,
MacroPoint.
Yeah, MacroPoint. Yep, exactly.
So there's a lot of them. I think we just named 5. I think there's probably 20 more, but the expectations from shippers are increasingly there. They're saying, hey, I want this. And I think it's also a sales pitch. I joke about this sometimes. When visibility came around, I want to say 5 years ago, everybody coming on my podcast, 50 people in a row said, oh, I want to talk about visibility. Like, we can't have visibility tools be the only topic we talk about. But it was a big deal. And now it's not quite there yet, but it's close to table stakes.
It is close to table stakes. And in a lot of cases, it is table stakes. So you need to be able to integrate, or you got to be using one tool, right? Whether that's customer driven or organizational driven, you got to be using something.
So my TMS needs to be able to easily integrate with visibility tools. So if you have an old, and I know there's some, even the older companies now, the older transportation management systems, I believe are creating integration layers. So even they can easily upgrade. Again, they have some of the largest shippers in the world working with them. So we need the visibility tools.
I remember exactly what visibility is a really good example of this. I remember MacroPoint came out in 2013, 2014, triangulation of driver cell phones. It was a great technology. We used it. It's still a great technology, right? But there's a lot of spaces in brokerage where you have a new technology or a new capability come out, and it becomes commoditized very quickly. And when I say commoditized, a lot of competition. There's a lot of competition and visibility now. And you're exactly, there's 20 others that have some kind of visibility tools in there. So
And I think they're all getting better and better. And we used to have visibility that we expected once it arrived in the US. Now I think we expect visibility on the ocean, and wherever my stuff is being made, I want visibility. And I think also we're seeing more business intelligence and AI, and I think we want our visibility tools to be able to pull information from those. And it can't be garbage data. So that's always the nature of new technology. As you go, yeah, I've got all this. Here's 100 shipments and 16 are incomplete. And I think these 4 are wrong, but
yeah.
the data gets better and better over time. Next thing I want to talk about with first TMS, 100% among the companies other than the lifestyle business. Visibility, you're saying 60, 70% of freight brokerages are using visibility tools, which seems even low to me, but I get it. And then there's all these tools that have popped up for very good reason. They're carrier onboarding tools, carrier vetting tools, carrier management tools. And we've had cybersecurity and freight fraud, which I guess are probably first cousins, lots of issues. So I think what we found out in this industry is I have to work with the right carriers to prevent freight fraud. But also, I want a good relationship with my carriers. I want to make sure they're in good financial shape and using insurances and not in a ton of accidents. I want to make sure the driver's good. So we've always done that kind of stuff manually, but now we're seeing, again, this big category here that such an elegant name, onboarding, carrier vetting, and carrier management. And that's a huge, big bucket of companies. And I'm going to name a few, Kevin. I want your thoughts. So we all heard of RMIS. Who owns RMIS? I forgot. Okay. So then we got Highway. Everyone knows those guys. They've been on the podcast. My Carrier Portal, Carrier 411, Carrier Assure, and there's dozens of others. And so important. What percentage of brokerages are using those type of tools?
I would say probably 85% now, 85%. And they're probably, you go back to the day 10 years ago where people would go on Safer Sits and see a safety score and piece together 3 or 4 different data points. They might check Carrier 411 or Safer Watch or something like that to supplement that. But they made the decision 90% of theirs. And I don't think you can do that anymore. I think with the fraud out there, you need tools that are comprehensive to help you along with that. And also, I remember as a brokerage, you'd email out the packet and they would fill it out, they'd print it out and fax it back to you. And there's still people who are emailing their own packet out to carriers, which not very efficient. I think links and portals and being able to streamline that process is very important. And any kind of analytics you can get to help approve carriers, identify red flags, you should be using.
Yep. Kev, when I came to this business, which I'm going to say 2009, 2010, I came from automotive and I was shocked by, I went to a little 3PL and I learned how difficult this business could be. And I remember at the time saying, oh, this is so many clerks in this business, so much stuff being faxed over and manual entry. And I'll send you that Excel spreadsheet, and then you put it in your TMS, all sorts of that going on. Now, I think for sure the bigger brokers, but even the smaller brokers now recognize that we have to get more done with fewer people. If you're going to make money, if you're going to be successful, you have to be efficient. And also, I think the younger generation, Kev, is showing up and saying, wait, what do you mean data entry? Isn't there a technology for that? And of course, if it's not there, they're going to invent it. And so we expect now, I don't want to do 2 loads a day with my brokerage team. I want 20, 30, 50 shipments. And companies, I just talked to Anthony from Parade. Again, they're using AI, using some of these tools to get a lot more done per broker, because that's what we're trying to get to is I want to lower the cost per load. And how do we do that? We use technology.
Yeah. Yeah. We take out the manual work. Waiting on a fax machine. I remember waiting on a fax from a carrier on a hot load. I don't know. And then you're having to fax an insurance office that might have a 3-hour
Yes.
lunch, right? To get an insurance certificate back. And it was an all day process sometimes to get a new carrier set up. And it just doesn't make any sense.
Yeah. And I think we've seen a lot of brokerage companies. I've heard people say this, oh, I've got 3 screens. This one's got insurance. This one's got my carriers. This one's got my load. And you're basically using humans to do computer work. And there's going to be human error in there, and it's exhausting. And much better to say, hey, we've got some integrated systems, and I can bring carriers on very quickly. I can also make sure that they're the right carriers, because the last thing I want to do is, I think a lot of the smaller carriers in particular are one bad load away from out of business. So we have to do a better job. And that's where this is just a huge category. But you said it's about 85%. So first off, TMS, 100% for anything be above the lifestyle business. Visibility tools, you say about 60, 70% of the brokers are using that. The onboarding, vetting, carrier management tools, the productivity tools, you say that's also, it's to prevent cybersecurity and fraud issues. That you say is about 85%. The next I want to talk to you about is pricing tools. More and more of those out there. Talk about how we're using those.
Yeah, 90% are using some sort of pricing tools. I'd probably say 75% are using paid pricing tools, right? If you have a truck stop or a DAT or a 123 load board subscription, you get some pricing information with that. A lot of the factoring companies, if you're using a factor, they have rates as well that's available.
Yeah, and there's great companies like Green Screens that have popped up, and they're just giving you tremendous insights. And we've always had that tribal knowledge, I guess we called it, where you go, hey, Kev's an old pro. Let's go ask him what the Atlanta to New York rate is. If Kevin's not sitting there all the time, how are we going to grow our brokerage? And so increasingly, we want to have some stats. And again, I think I know with Green Screens, they've been on many times. They've done a fantastic job. Also, your old company, Sonar from FreightWaves, great tools.
Yep, great tools. And everything moves on the market or the pricing, whether it's a good market, a bad market. You're trading transportation as a broker. You need to get the most efficient prices and market-based prices. Number one, you have to know what the market is. Are you paying above the market? Are you paying below the market? There's cases where you need to do both, but you have to know where the market is. And that's just the core function of a brokerage, is to know the pricing everywhere, because the asset-based carriers are going to know the pricing in their market. The shippers are going to know the pricing in their network, their market. Yeah, a broker needs to know the entire market. Everyone's, wherever that lane is, that they need to know it. And yeah, again, great pricing tools, great application for AI too.
Yep. So the next category, so that you said that's about 90% of freight brokers are using some sort of pricing tool.
Some sort of rates, yeah.
And the next category I want to talk about is another big one, which is factoring and the financial companies that are out there helping us get paid faster and pay our carriers faster. Talk about that market for a minute.
Yeah, so about 75% of those brokerages offer some sort of quick pay, which is not necessarily factoring, but it's where they're paying carriers within 24 hours or 48 hours at a discount, right? They're kind of factoring their own loads. And probably 50% to 70% of those are using some kind of outside vendor, whether it's Triumph Pay or Relay or Denim, or there's a few others out there, so that the offer brokerages quick pay. They kind of bank that quick pay for them.
Yeah. And I think also, Kev, what you mentioned earlier, some of the factoring companies can give you some sense for what pricing is. I think also I've had Denim on the podcast. I think I've had TriumphPay, but I know the Denim guys, if you're working with them, they're more financial partner. You start to get some real good analytics. And I've seen like their reports where it says, here's your most profitable customer. Here's your least profitable customer. Here's who pays you fastest. Here's who pays you slowest. And wouldn't that be interesting if you're sitting down and going, hey, these guys, they pay us the slowest and they're the least profitable account. Let's start pricing this a little higher and see if we don't lose them. And I think that is what we more and more expect. And it's funny because in the past, it was like they pay the bills and nothing else. Now, and again, I can speak for Denim because I've talked to them and I know TriumphPay is similar. These are companies that provide really good technology solutions that have analytics that you would never have on your own unless you were an enterprise or a large cap company.
That's kind of table stakes now in the financial space, right? Is that you have to deliver that technology and mostly that's analytics, right? To make better business decisions. If you're just offering paper, right, factoring and money, that doesn't really cut it anymore, right? You have to have that analytic, you have that technology play. Denim does a really good job with that.
Yeah. I also recently, I know I put Upwell on this list. It's not a factoring company, but it is a company that helps you get your invoices right to your customers. Sometimes customers have very elaborate invoicing protocols, and it's easy to, yeah. And then when you upload it to a portal and it gets shot back out. And Charlie Dahoney, good friend, but also a industry pro. He's been there, done that, done everything in this business. Now he started this company, and I just interviewed Brad Hollister, who's working with him. He founded Swan Leap, and they're killing it with that because their pitch is you don't need to factor money if you can get the bills right and get paid faster. And they're enabling companies to get paid faster. And I think that's just such a great, it's basically they created a new category in our space.
It is. Talk to Charlie about this, and it's you don't really think about it sometimes until you start talking about it, especially with Charlie. I've had him on my show as well. If you have 10 customers, you're at 10 shippers, they all want to be invoiced differently with different parameters and different guidelines. And so if the person who's doing that for you is off or they leave or whatever, you lose that tribal knowledge, right? You need to set up those rules to where it just automates the process, and it makes sense. It just makes sense, which is always a good business when it just makes sense.
They're using AI to double check everything, and I love what they're doing. One last category, and it's not necessarily just technology, but it's this, we talked about it earlier, is there's more research available with companies like yours. There's more mergers and acquisitions companies out there than ever before. There's also all the techies, the VCs and the private equity guys who all of a sudden recognized our space. So we're starting to see the whole brokerage space just grow up because we have venture capital money came in, and we also saw mergers and acquisitions. Not that these things didn't happen in the past, but it just feels like we've been discovered in this space. So talk to that for a minute, Kev.
Yes, interesting. It goes, so I do a weekly show Thursdays at 2 p.m. Eastern on LinkedIn, YouTube with Casey Larkin. And we had his dad, John Larkin, on, who's an industry legend, right? And he's part of Clarendon Capital, Venture 53. He's taken a lot of these public companies public back in the day, but we're talking about the tech boom and started a few years ago. There's a lot of mature companies out there that were startups. They're still startups, right? But they're later stage startups that probably would have exited over the last couple of years, except the market's just been crappy. The freight market's been crappy. The capital market's been crappy. It's just not a good time to exit. So they're continuing to roll on until better weather ahead. Maybe that's 2025. It's looking like it might be second half of 2025 into 2026. And he has a prediction of a lot of companies doing exits out in the logistics world, which makes sense, right? Because they need to exit. The investors need their capital back. And that capital liquidity, right, should make funding new startups much more liquid, right? Much better
Right. We get a little bit of money, a little.
Cash infusion, right? Go back into to reinvestment. The next 5 years really look very well, very good for this space and technology.
I love it. I love it. Kev, I'm going to summarize what we talked about, then I'll get your final thoughts on the topic. So I'm talking to my friend Kevin Hill, the founder of Brush Pass Research. They have really great research. So if you're selling into the freight brokerage space, Kev's got all the names and what they're up to. And there's a 25,000 brokerages out there, freight brokers. I think there was 30,000 a year ago. So Kevin's the one who's been tracking all that. Again, Kevin's a great follow on LinkedIn. I'll make sure I put a link to your LinkedIn profile, link to your website, and any other links you give me, I'll put it in the show notes. Well, we talked about the percentage of freight that is brokered, and it used to be 15, 20%. We didn't really even have good stats on it. Kevin's the ones putting numbers to this. It jumped up to maybe 25% during COVID. Now it's come down to 21%, but maybe that's the new floor. And the reason is it looks like our whole industry has had an upgrade. We've had a glow up here in the freight brokerage space. So we talked about the brokerage segments. I won't go into all the detail, but we have the enterprise, which is 500 million. Those are the big guys, 500 million and above. We've got large cap, 100 million to 500 million. Mid cap, 50 to 100. Growth cap, 10 to 50 million. Micro cap, 1 million, 10 million. And the lifestyle, that's under $1 million per year. There's a ton of those guys. But basically, there's 25,000. But the big guys, there's only the top 3,500 are basically all the volume. Anyway, we also talked about technology. So TMS is a given for everybody who's not a lifestyle business. And even those guys are have it because it just makes sense. It's the foundation for our technologies or for our tech stack. Talked about visibility now becoming increasingly table stakes for the freight brokerage business, 60, 70%. We talked about onboarding, carrier vetting, carrier management. There's a million tools in there. It's a big category. And it's to prevent cyber security issues. It's to prevent fraud. It's also so we can be more productive and stop treating our people like data entry clerks and having them be more analysts and consultants to the shippers they're working with. Next, we talked about the pricing tools, the DATs, the truck stops, green screen, sonar. There's a lot of tools that give you the numbers. So you don't have to have that tribal knowledge. You can still use your tribal knowledge. You can still override it, but it's good to say, hey, here's what everyone else is paying for that lane last week or this morning. So 90% of the freight brokers are already working with that. Then we talked about factoring and the financial space, increasingly important in this business. The Denims, Triumph Pay, Upwell, Quick Pay. And again, they're not just factoring, they are financial companies, they're tech companies that are helping you get paid faster. And last but not least, you talked about there's a separate category here, which is just the growing up of this industry where we start to have companies like yours that are providing research. We have VCs who care about us and our tech. We have private equity that's helping with the consolidation. And basically, I think this is the glow up that I was talking about is the shippers looking at us as a more valuable segment of the business than in the past. Anyway, enough of my blather. Kev, put a big old bow on this one. Final thoughts on the topic.
Finally, it's a good time to be in tech. It's in brokerage as well. Brokerage has consistently grown over the last 10, 15 years. I think it's going to accelerate that growth of the percentage of freight that moves through the system. And that's really through technology, being able to offer more and more solutions, be a one-stop shop in a lot of ways. I think money's still coming in. Capital markets are getting better. The freight market's going to get better in 2025 into 2026. And it's just an exciting time.
Yep. And I think we didn't talk about it, but I think we hit bottom in the rates. And I think if you're a shipper, you want to lock in the next quarter or two into great rates. We want to lock in for a year. And I think brokers, I think, are starting to see a little bit of growth in their margins. Anyway, Kev, let's talk about conferences. I know you're going to be at the Broker Carrier Summit, and that's coming up here in April. And that is in Indianapolis. I hope to be there. That's the hat you're wearing, Kev. Put it to the screen so everyone can see it. So anyone who's on the video can see it. Hold it closer to the camera. So what do we got there?
This is from the golf tournament we do at the beginning of every conference. It's the Post and Pray Classic. It's a great hat. It's free to anyone who signs up for that. But the Broker Carrier Summit, it's really unique conference to many of the other shows. Focuses on the smaller brokerages and carriers out there, and really education, communication, building those better relationships, understanding each other, empathy, walking in each other's shoes, discussing issues and miscommunication and resolving quite a bit, and doing deals. There's so many deals that so much low freight is covered during that. Everyone talks about networking and maybe we'll work together in the future. People are working together right then.
Yep. I talked to Dan Lindsay the other day just on the phone. He's going to come on the podcast sometime after Manifest. We're talking here on the 27th. I'll see him at Manifest. And by the way, I think Broker Carrier Summit, Dan Lindsay and the fellas are going to have, I think there's a party they're having, I think, on the first night of Manifest on Monday night. So I'm going to see Dan there. And when I was talking to him, he said he started the Broker Carrier Summit really with the idea of there's a lot of conferences, but this is a conference specifically for brokers and carriers to get them on the same page. And I mentioned the little bit of the rub sometimes is the broker thinks that carriers, which is the wrong way to say it, the carrier often thinks the broker is making all the money and the broker is trying to explain that he's not making any money. And again, there's always going to be that push and pull. But if you can get together and have a sit down with those guys, have a beer with those guys, hopefully it starts to smooth out those relationships. And this is still, we talked about tech today, but this is still a relationship business.
All relationship, and it builds those relationships. But yeah, I'll be up there late April. I think it's April 28th through May 2nd.
That's in Indianapolis. Yep.
Yeah, Indianapolis. Yep. And I'll be at TIA down here in Texas in a couple weeks before that.
When is TIA?
Mid-April.
And where's it at?
It's either Austin or San Antonio.
All right, they're close by. Nothing's close by in Texas, but
True.
relatively.
True.
So anyway, Kev, it's always a pleasure talking to you again. I'll put a link to your LinkedIn profile, link to your website, and any of the links you give me, I'll put in the show notes. And it's always a pleasure talking to you.
Always a pleasure talking to you, Joe. Thanks for inviting me on, and I look forward to our next show together.
Yes, exactly. And thank all of you for listening to my podcast. Your support's very much appreciated. Until next time, onward and upward. You have been listening to the Logistics of Logistics podcast, where we engage with leaders in the logistics and supply chain community. If you like what you hear, please subscribe, hit the like button, and leave us a nice review on Apple or Spotify or wherever else you listen. Also, please check out our videos on YouTube and connect with us on LinkedIn. We're very big on LinkedIn. And you can also reach us on the logisticsoflogistics.com, our website.